Good afternoon, everyone. My name is Cecilia Cheung. I am the Managing Director of Linnovate Partners Limited. I'm based in Hong Kong, and thank you very much for joining my panel discussion today. Let me introduce you to our distinguished panel today. To my left, it's Rebecca Silli. She is the partner of Tiang and Partners, a PwC law firm, and Rebecca has over 20 years of experience in M&A transactions. And to her left is Nichols, Tiang, and he is the CEO and the Executive Director of CTI Management Limited. And to his left is Anson Law, representing Hong Kong MA. And Anson is responsible for the outreach market division, and he has been spearheaded development on the LPF. And last but not least is Henry Lin, the founder and CEO of Linnovate Partners, which is this disruptor in asset services industry. Okay, now by setting the scene, now we would like to talk about the projections for this 2021, for the rest of 2021, and what this will mean for PE and VC market in Asia. And also, we will also discuss about the latest LP trends and how the LP plans to capitalize the investment opportunities in Asia. And last is to also explore on the ESG risk and what the LP has concerns on ESG, as this is its emerging importance area. Now, okay, without further ado, let's start on the first question. Now, 2020 was a very challenging year, and across all industries. And as we wrapped up first quarter, now what are your thoughts and views on the overall investment pace, particularly in PE and VC industry, like as we begin the second quarter of this year? So. Maybe, if you don't mind, if I go to you, Anson, first to talk about what you observe on your observations about that.
Yep, sure. Thank you very much, and thank you for the introduction. Thank you for having me today. Very pleased to speak at this webinar. Now, in terms of the investment market, I think that 2020 we have sort of seen a slowdown at the beginning of the year. So when COVID started hitting Hong Kong as well as other parts of Asia, the world, we have seen a slowdown. However, that slowdown has kind of subsided towards mid of Q3 last year, and we've actually seen a lot of activities picking up in Q4 last year. Now, in 2021, we have seen sort of slightly slow down again in Q1, but now if you compare the figure with last year's the same period, it's actually not too bad. So in terms of Hong Kong, in terms of private wealth management market, we have seen a remarkable growth in terms of AUM by about 20% last year. In terms of PEVC, Hong Kong is still a large PEVC hub in all of Asia. We are only trailing after mainland China. And if you look at figures last year, it's $160 billion worth of capital under management. Now the figure has increased to roughly 171 billion. So I would say that the market has been robust, has been very resilient. We are seeing activities from fundraising to deal making picking up again.
Thank you for all these informations and stats. Now, what about Nichols? Do you have any observations in terms of what you think about the investments?
Okay, I think I can share with you my experience or my observations from my perspective, because I don't have all the numbers that Anson has. What happened is that on my side, I can see the pickup in activities, but this more, from my perspective, is more on the restructure of the existing VC and PE. What happened is that I don't know. In the past, a lot of people's got a timetable of say 2 years, 3 years to exit from the PE or VC. What happened is that because of the economic situations, everything's, I think the overall IPO market slowed down a little bit. So what happened is that some of the timetable has changed or delayed, or I should not use the word delayed. It has been rescheduled. So some investor who have been waiting for the opportunity to exit, they try to exit using another way to do it. That is doing a lot of sell and purchase situation. My experience over the last, I think starting from the fourth quarter of last year, of 2020, we can see that something like in the market, there are some swap, what I call it is buy and sell activities of the shares, of the investor shares in the PE and VC market. That my observations. That is my first observation. The second one is that, again, the cross-border transactions still dominate the market to me. A lot of money still coming from, well, my background is a mainland company.
Right.
So we can see that the mainland investors still try to get the way out of China to invest somewhere else. And at the same time, some money still try to get into China. And the years before was very interesting as well. You can see that there was a period of very intensive tensions between US and China. We can see that there are subtle movement of the funds between these two countries during this period. I actually observed this subtle changes. But I cannot say it's a mega trend, but you can see that there are little subtle changes of movement in this cross-border transactions. So my second observation is cross-border transactions still continues to dominate the whole situation. So that's my two observations.
Right. Okay, thank you.
But one thing is very surprised me, however, is I have been expecting some distress funds, distress PE or VC, but I don't know. It's just very interesting. I don't see many distress funds happen or take place. That's just my situation. I don't know whether Rebecca have the experience in this as well.
No, difficult for me to comment, but I agree
Right.
with you.
But I think Nichols' comment is quite interesting. The observations about the PE, the activities, VC activities actually increased, but actually there's like more on restructuring and also delaying in the plans. And so these activities are not really purely new investments, but rather it's a delay of certain, the existing plans.
Yeah.
Now, Henry, do you want to add on to that?
Well, I think certainly what Nichols and Anson said is actually pretty true. One with a lot of numbers supporting, another with seeing the actual reality in what's happening in the actual market. From my perspective, and I see pretty much the same thing. And based on some research paper that we have recently, studied. In fact, if we look at all the exit, the returns for private equity investments for the top tier, like the top 10 investment houses in the globe, and that return actually has been much better compared to any of the previous years. And the number is actually scary. I mean, in 2019 it was like negative, but in 2020, I mean, surprisingly, it was all positive. And the number is actually growing on a quarter-by-quarter basis. And it actually continued in 2021. And that's a good thing. It's a good sign for, and also a means for the GP will raise more capital because they can actually see the return. The LP are more willing to support, to make, to support them for the new funds. And that's why, I mean, from our perspective, because it's quite direct from our perspective, we see the number of funds starting up is actually substantial for 2021. Those funds are in the old days they are range from $200 million US to $300 million US. Those funds are literally is rocket and starting, and that's a good thing. And I think the market is not nowhere to slow down. And that is not just for US dollar funds, also for RMB funds. Because as a company that we serve both US dollar and RMB funds, we're actually seeing that the similar things are actually happening for RMB funds. So hopefully, how we see the market will still be growth, will still keep the same pace for the upcoming 5 years. And based on a lot of research paper, and actually the forecast that they have made is one of the biggest, for decades. In terms of the growth in private equity and venture capital, in particularly in APAC.
Okay, thank you.
I just want to add one thing. When talking about the growth, sometimes I think it's, I don't know whether it's right or wrong. Maybe you can comment on it. It seems to me that the PE or the LP, they are willing to actually, when they do the buy and sell of their shares in the PE, what happens is that they look at the PE and aware that some actually have been expecting a delay in the IPO, or they may think that it may turn into a distressed asset. But what happened is that it didn't happen. So what happened is that the people say, hey, when I look at this kind of projects, they survive and getting stronger. So actually that actually attract more people willing to pay a higher premium for those existing or surviving opportunities. Maybe that is the case. I don't know whether you agree or not.
Yep, it is true. It is true. And at the same time, you see, because if you look at the alternative investment market in APAC, in particular, we talk about in Asia, Greater China, in South. I mean, the market actually literally are on the light for the world only starting like 10 years ago. So imagine the average fund sort of cycle is about 9 plus 2, so talk about 11 years. So you start to see the new funds are actually picking up for the existing deals, and that's exactly what's happening now. People are willing to raising a new fund, just keep their investment and wait for the right moment to do the exit.
Okay, thank you for your comments. Now it's interesting. I think at least we are consistent, and we do think that for the rest of 2021, the projection it's quite positive. I guess the short-term impact to the industry it's clear, as the election results has done, and also with the coming out of COVID-19. So everyone is trying to recover and bounce back. Now, so that's good. Now, for the long term, there are still lots of uncertainties, and I guess the GPs and the LPs are still very cautious about what is going to be play out. So okay, so I think that's good. At least we're quite positive on that. Now, let me have a follow-on question on the second question. Can you share more or on any specific topics or changes that you foresee that will be have the most impact in PE and VC industry in Asia, in this region? And then I will also touch upon the recent government initiatives in the region. Say, for example, Hong Kong and Singapore. We can talk about the different initiatives the government has. Now, let's start with the impact on the PE and VC. Now, maybe, okay, Rebecca,
Shall I start?
Sure.
So I think the biggest change in the last year, and actually in the last 2 years probably, has been obviously for Hong Kong the adoption of first the OFC 2 years ago with let's say a revamped or an improved version last year, and more importantly perhaps the LPF structure. So the news here is obviously the competition is growing for the fund domicile jurisdictions. It's no longer just a simple case of maybe just picking up Cayman and going with that. The world is changing. There are push factors in the sense that there is greater expectation for transparency. We know that tax, fair contributions, so to speak, and substance are hot topics. And this has obviously put quite some pressure on Cayman in particular as a almost systematic jurisdiction for fund formation. So the timing is fortunate and is good. Singapore is also obviously competing and gearing up. And it's a bit the traditional, competition between, I would say, Hong Kong and Singapore, not just in a PE/VC space, in all sectors. But from my perspective, I think, and if you look at objective features, I think if we look at Hong Kong and Singapore versus Cayman as a general approach, Hong Kong and Singapore are almost at par. Legally speaking, the regimes, whether you look at LPF or whether you look at OFC versus VCC, they are very, very similar. We operate in common law jurisdictions. So we both have to compare ourselves to Cayman as basically a reference jurisdiction. Tax-wise, obviously, it's a little bit more complicated, but we are in the three instances in extremely transparent and rather simple tax regimes. Obviously, Cayman is a lot more mature when it comes to the funds industry tax regime, but Hong Kong is catching up quickly. They have changed what was expected, I think, and including recently on the carried interest. There is the UFE regime, so it's going in the right direction. So these are objective factors. Now, there is obviously a series of criteria for investors and for managers to choose a location for the fund formation. And the market is also one of them. Where is your investor base? Where is your investment market location or geography? And in that respect, I think the LPF has been extremely successful in the last 6 months. We already have almost about 200 LPF registered. OFC has been slightly more lukewarm response. It's slower compared to the VCC, but it's getting there. And I think the changes of last year certainly were the ones expected from the market. We have to be realistic. It takes a while to change. You do not create a fund domiciled jurisdiction overnight. It's an extremely competitive market, and there are a combination of reasons why funds will decide to locate here or there. And I personally think that Hong Kong and Singapore will actually coexist as alternative options for different reasons, and they will attract different types of investors and managers. Hong Kong is obviously a natural choice for everything that is linked to China, for reasons we don't need to comment on. We know them by heart, not just in the PE/VC industry. But that's going to happen, and that's for sure. And there are also technical reasons. The mutual recognition schemes between mainland and Hong Kong will be one. So all of this is extremely positive. Singapore will continue, obviously, to push along, is extremely competitive as well. I think they have been slightly more forthcoming in terms of market promotion. So it's more the market perception that Singapore is ahead. But if you look into the details, I think Hong Kong has everything that it needs to offer as well to be equally competitive. We just need to be better at promoting Hong Kong and tweaking some of the features that are, slightly a little bit more maybe conservative or a bit more restrictive. And in this industry, the slightest difference makes it a bit of a disadvantage that will tip the balance in one way or the other. But certainly very positive developments as far as we are concerned. And we are very sure that both the LPF will continue to be a successful structure, and the OFC, because it is more complex. It will necessarily take longer to pick up, but there is no reason why it shouldn't establish itself as a serious, fund domicile jurisdiction alternative for Hong Kong.
Okay, right. Thank you, Rebecca. Now, with LPF, definitely I can't miss Anson. Yeah. He has been working very actively promoting the LPF and helping the industry, PE and VC industry on this aspect. So, Anson, can I turn to you and can you share your thoughts on LPF? Yes, please.
Sure. Thank you very much. And I totally agree with what is just been said by Rebecca, especially in terms of the every detail matter, comment on every detail matters, and this is precisely what we did in developing the LPF regime. So back a few years ago, when we successfully lobbied the government, the policymaker, to launch this regime. We also worked heavily in terms of talking to different stakeholders in the industry and in terms of the law drafting process. So what we did essentially is look at different jurisdictions' offerings, including the Cayman Islands, including the state of Delaware, Singapore's LP regime, Luxembourg regimes, United Kingdom, Australia, etc. So, and taking the good things about good features, the commercial features about in these regimes, and incorporating into the Hong Kong version of limited partnership law. So, if you look at these, our regime, with extreme detail, you will discover that every good feature that people offer out there is indeed present in our regime. And that's why when we talk to the close to 200 LPF users now, their feedback has been very positive generally. Now, at the beginning, we planned this regime having in mind the PC and VC industry. Now we are seeing that with the ample amount of flexibility that we've put into this regime, we are seeing, to our amaze, that a lot of users are using this not only for PE and VC investments. Some are using this vehicle as an open-ended fund. Some are using this for liquid investment strategies. And some are using this vehicle as a holding vehicle for their family assets. So there's a whole lot of diversity in the usage of this regime. And what's more encouraging is that we are now, with continued lobbying, we are now going to open the door for one more group of users, which are the existing offshore fund users. Very soon, we target within this legislative year, we will pass a legislation to allow redomiciliation. So if you operate currently an existing offshore fund, very soon, in a couple of months' time, you should be able to migrate the fund into Hong Kong LPF without the need to go through a lot of difficult procedures. It will be a very user-friendly regime. Thank you.
Okay. It's good to hear about the redomiciliation from offshore to Hong Kong LPF. That's very good.
Quite a game changer for
Right.
for the success of both LPF and OFC, I think.
Yes, so that's
Very
very exciting. Okay, so I think we have a few minutes left, and which Nichols.
Got a question. So, I mean, with all these changes, and of course, whether Hong Kong is working on, Singapore will catch up, and it's actually that's how the whole thing works in the region. But how from Hong Kong MA's perspective, and how we can make it not a competition, but make it more attractive, and making more easier for people considering Hong Kong or Singapore as a second option in terms of fund domicile, and what are the future plans, and to add on that, to helping the people are considering Hong Kong as an alternative, because there are a couple of things, right? You need to have like legal support, other services support, so it's not just with the law itself, right? With all the dispels itself. So what's the plan from your perspective, and see the government will help on promoting that, or all things around that formation and options for the GPs?
Yeah, totally agree. Now, whether Hong Kong could continue to be a PE and VC, or generally a financial center in Asia, it's about the ecosystem that we offer. So it's not about one LPF regime or one tax provision in the Inland Revenue Ordinance, definitely. And so look at Hong Kong. We have actually been offering a lot to the market. Now, in terms of, you just mentioned the deep talent pool that we have with, the world-class lawyers in town. We have more than 40,000 CPAs in town. We have more than 10,000 lawyers in town, which is very international. They know mainland, the mainland culture, mainland business. They know international perspectives. There are different, specialties, etc. And we have a robust banking sector. We have the world's leading IPO market, capital market. We are robust. I mentioned, talk about the private wealth management market is also growing rapidly. So all in all, I would say that the market has been offering a lot. And what the government can do is, the market outreach team, our team, has been set up recently, and we will target different segments and with different strategies. Now, in the interest of time, I'll just give you a few examples. Now, for PEVC, we have been doing a lot of outreach and promotion. I was talking to Cecilia before the webinar. Since May last year, I myself and my team have been doing more than 60 webinars on PEVC market promotion. And in these webinars, we gather market feedback in terms of how we should improve in terms of the LPF, how we can do better for the UFE, the tax regime for Hong Kong. And this year, you're seeing that we are proposing changes to the LPF regime. We are also proposing some tax amendments to the Inland Revenue Ordinance for the UFE. And that's how the process works. We will continue to outreach into the market to gather feedback and to feed it back to the administration to make the regime better. So all in all, we're happy to work with the industry.
Yeah.
Right.
If I can add, I think for me would be two factors that Anson actually mentioned is one is education, because you just need to educate the markets about the new regimes and show that they're actually not very different from what they're familiar with. But it's just we're creatures of habit, right? You've been using Cayman funds for the last 20, 30 years. Why do you want to suddenly change, and how different is it? And there's a bit of laziness, and is it, I'm not comfortable. It's actually, if you have a detailed comparison, you will realize the differences are actually very minimal, and there might be advantages to Hong Kong, as a matter of fact, in some instances. But it's about learning something new, so you need the education process. The other thing is the constant reaction, because it's an evolving market. It's also an evolving landscape, and we know that things accelerated also because there's growing pressure on jurisdictions which might be considered to be, tax havens and end up on the blacklist, and therefore substance and etc. So everything is pushing for a consolidation of the location, of the fund management, the operation, the investment. This is all in favor of Hong Kong. It's also in favor of Singapore if you choose versus maybe offshore. So there is definitely a trend offshore to onshore. But you have to constantly change and maybe adjust and tweak your legislation, which is exactly what the Hong Kong government has been doing over the past 2 years, and much faster, I think it's fair to say, than what we had seen in other industries. I'm not talking about funds specifically or the financial services, but and that's what is needed. It's the speed of reaction and picking up the best practices everywhere so that you're just on the market.
Okay. That's good. So
constantly at the forefront,
Right. So LPF seems to have the best of all worlds. And yes, indeed, I think the domiciliation, the choice of location, really have a number of factors. It's LP driven, tax efficiencies, etc. And education is very important to the LP, to the GPs, and to different stakeholders. So thank you very much for that. Okay, now let's switching gear a bit. Now, from an investor's point of view, it seems that Asia has been drawing significantly more attention over the past year as COVID coming out of COVID-19. Now, do you foresee this trend for the rest of 2021 to continue in terms of investor allocations? And also, what are the common issues or obstacles investors may face when they invest in this region? Now, who would you like to take this question? Nichols, maybe?
Okay. I think what happened is quite. I totally agree that Asia remains a growth engine for a lot of PE and VC over the last few years. And I do believe that this trend will continue. You probably know that my background is that basically we handle a lot of mainland investors.
Right.
Actually, the trend, well, right now, as I mentioned in the very beginning, said that another trend is that we have like cross-border transactions still will dominate. But when I'm talking about cross-border, I would like to focus it more on Asia nowadays. I thought more focused on. In the past, if you are talking about 2 or 3 years earlier, I think what happened is that you can see the inquiry from our investors, from our clients in China. They probably ask for, hey, how to invest in the US? Can you propose a structure for us to invest in US, Europe, all this? But nowadays you can see that more and more inquiry actually is focused on Asia nowadays. So I think I can see the trend. I think that had developed. And whether this trend will go on, well, in my observation, I would say this trend will continue to focus at least. I think in 2021, I think definitely will continue to be the trend. Whether the improvement of the relationship, hopefully, between China and the US at some stage may encourage more people to go to the Europe or US. But I think for the time being, a lot of people investing outside of China still focus a lot in Asian market. I think that definitely is the trend. At the same time, some Asian investors, when they are looking for investment opportunities, they also look at China as well. I would say, yes, when we are talking about, well, we usually try to distinguish between Asia and China. But I think from now, this point onward, we would say that China actually is part of Asia. The cross-border activities will include China, maybe Asia and China. I don't know, for some reasons in the past, whenever we talk about Asia, we usually ignore China.
China is part of it.
Yeah,
Yes.
but I think looking at the whole game, or my experience, my observation is that China's investors definitely are part of the game now.
Okay.
And at the same time, the Asian investor, when they are looking for opportunities, they look at China as well. I think over the last 2-3 quarters, my observation is, if you're talking about whether the market's got good funding for investment opportunities, I would say yes, there are a lot. And they have been looking for opportunities. Whether in the past they may focus only within Asia, the so-called old definitions of Asia excluding China. But nowadays I can see that the people are looking at both the China, the Asia, the new Asia, including China. I think that was the trend.
Okay, so maybe what do you see the investors will face in terms of obstacles or challenges when they invest in Asia?
Yeah, I think the obstacles remain. I think still, the barriers to invest, to move the fund inside China or move the fund outside China, our inbox still, there is a barrier in between. I definitely can observe this. I don't want to comment too much on the government policy because it is ever-changing environments. The landscape has been changing. I would not say it is much more easier, but I would say some Asians or some friends in the legal circle are trying to help to facilitate the flow of the funding in and out of China. Actually, that is the area that I think we have been working on. I think our friends in the legal circle are helping us to do this as well. So that is I think the barrier is still there, the obstacle is still there, but we are working on this to improve it.
Okay, thank you. Now, what about Anson? Would you like to add on to that about what do you see, from an investor's point of view? What do you see, like in Asia? Definitely you see the growth in Asia, and what do you also see that the concern or the obstacles from an investor's point of view?
Yeah, sure. I'll briefly supplement a few points. So I totally agree with what Nichols just said. In terms of the growth in Asia, it's remarkable. From the IMF and other projections, so Asia, including mainland China, India, and Asian countries, are going to be expected to grow a lot in 2021 as compared to the so-called the Western or the more developed part of the world. In terms of PE and VC deal origination, last year, in last 2 years, China, I would say generally would be constituting about 1/3 of the APAC region in terms of the deal flows. Now we are seeing that in terms of deal value, has gone up to more than 50%. So China out of APAC. So definitely the China portion is growing very rapidly in terms of family wealth. A lot of them are considering moving from first generation to second generation. And the trend that we're seeing with this second or third generation is that they tend to like to invest more into direct opportunities, into PE or sometimes into VCs, vis-a-vis their previous generations. They tend to be more conservative and less financially literate. So the next generation is definitely going to allocate more into alternatives. In terms of challenges, totally agree. Nichols will be more closer to the market than I am. Capital into out of China right now, there's still some constraints. We're seeing that with the various connect schemes in place and launching in recent years and going forward, this is going to ease. So we expect more and more capital flow into and out of China going forward, as well as flow of people. So I would say that there are more opportunities than challenge in terms of tapping into the mainland market.
Okay, thank you. Now, Henry, do you have anything to add on this?
I think it's quite one point I would like to mention. Nicholas' point about Asia in the old days, excluding China, is actually quite true. I never thought about that, but actually, when you mention it, it's really true. I mean, if you look at for the past decade, and people will look at it, Asia, they sort of eventuate Asia is not, China is not part of Asia, China is on its own. But it's true that you can see for the past couple of years and the years to come, China is totally part of Asia. A lot of deals, a lot of movement, communications, cross-border investments, Southeast Asia, Japan, Australia, and so on. You can see are more, it's more sort of integrated within Asia itself. Now, if we just want to get it closer to us, talk about Greater China and North Asia on its own. Yes, the opportunities are definitely there in Asia, and particularly in China. You see that as the whole financial market is opening up in China, and in fact they are the government are more willing to accept foreign capitals and to grow the whole sort of economies in China. So there are a lot more new regimes or new policies that are actually releasing. And we can see that a lot of clients start to ask, the new cross-border investment fund set up in Shanghai, the free zones and all this stuff. The demand, the inquiry of it is increasing. They're actively looking for sort of support to make sure they can make the investment directly into China. And I see, the trend, the policy will be, mature over time with all the supports from, either from a legal service provider's perspective or, the government policies perspective. Now, in terms of obstacles, I think, for the next question, we will talk about like the ESG. It's definitely one of the challenges, I think, from an investor's perspective when you actually look at ESG. So there are additional, KPIs, and because we do have a lot of these inquiries as well. There are certain, in like Europe, US, those policies are very mature, and those KPI actually has been exist for 100 years. But what are certain, right? They categorize it into certain criteria and requirements. And also data transparency on top of the ESG is, how they can collect the the investment information in a more transparent way. That is quite important. I think that is also, the obstacle from investment perspective. But as Anson said, I think the opportunities are more than the actual challenges, and that's why we truly believe the market, especially for the alternative investment market in Asia, will definitely grow massively for the upcoming years.
Right. Yeah. Okay. Thank you, Henry. Now, thank you for alluding to ESG. That is my next question. Now, it is a very important area of ESG now, and we do see that PE firms are actively trying to implement strategic ESG plan as ESG has become a top of mind concerns for a broad range of stakeholders recently. Now, and also PE, the LP will likely want to know how the GPs are addressing these risks in the future deals, potential deals, and also the ongoing investments. So ESG, may I turn to Rebecca first on ESG?
So ESG obviously is a extremely broad topic. We could probably talk about it for the next few days, but if we focus on what this means for us in our practice today, and not just as lawyer, but for instance with the broader PwC teams and what we see in the PE VC industry. As you said, first, I think the pressure comes from the LPs, okay? They have clearly expressed, and you take the biggest ones, the need for ESG to be part of their strategy and their investments, and therefore the GPs have to react because it's going to affect their fundraising, and it's also going to affect their performance. and how they report and etc. So it's a top-down approach. How this translates into new work is actually very diverse, of course, and we have to deal with an extremely broad range of players and a different level of maturity. Some funds are just beginners, they just want to do a bit of a tick of a box exercise, and they also play in jurisdictions which might be less mature, so they are just starting the learning curve. Some are more at the mid-tier, so it's more advanced reporting already and trying to embed a more complex ESG strategy in the investment and in the operation and monitoring, so they are on the journey. The next level of players actually understood that ESG is not just a risk management issue. It starts with a risk identification and management issue on E, S, and G issues, which themselves cover 50 different themes that were always existing in the way company operates. Environment is not new, social issues is not new, governance is not new. It's always been there, but there is a need to approach all these topics. And the more mature players understand that ESG is not about risk identification and management, it's actually about value creation, and it will lead to return on investments and actual benefits. So this is the next stage. The way we work is actually, we have to offer services to cater to these different needs. So sometimes it starts with basic ESG strategy and policies and defining the baseline. When we look at the portfolio of companies, some have never really, I shouldn't say that, but they've had a very basic ESG framework in place, but they realize they need to step up their game. So what we will do is an assessment in details, like a due diligence of existing ESG performance, so that it sets the baseline, identifies the gaps where efforts must be put, and then they will improve on their ESG performance on the existing portfolio. But more importantly, it's for new investments, of course. So embedding an ESG strategy and due diligence as the start, as part of the investment process, is the new trend. This means having a specific focus on DD, which is very broad, not just legal, not just tax, not just financial, it's operational, and it looks at things from a slightly different angle. Let's be clear, ESG is not a new thing, right? It's just, you can say it's a repackaging of issues that were always there, but we have to look at them from a completely different perspective. So we do specific ESG due diligence at the investment stage, and then when the investment is made and the onboarding, you have conversations with the management, and then make sure that it translates into changes where there were gaps and risk, and you try to mitigate. And then you can take it to the next level to see where actually there could be value creation opportunities so that the portfolio company sees and transforms even itself. And that's true not just for, I would say, green or clean investments, because obviously this is easier, right? If you're in the environmental sector, you can kind of naturally think you would be ticking the ESG box. It's a bit more complicated than that. But even in the less clean or less green or less sustainable industries, there's actually a lot to do, because if you adopt this strategy from the beginning, you can actually become a lot more competitive compared to the other players in the same less green sector, and therefore this will translate into increased value. And at the exit, of course, the same exercise has to be repeated, especially if there is an IPO, and especially if it's been a historical investment where, again, ESG might not have been at the top of the, let's say, the subjects monitored by the fund, then you have to do a bit of catch-up and a bit more detailed ESG, let's say, pre-IPO type of work. So this is what we're seeing at the moment, and I think it's an evolution. Now, if you don't mention ESG, it's almost like you're missing a huge piece of the conversation. But it's a bit more complex than just a buzzword.
Right.
I think the reality will be the market pressure will be there. The investors' sophistication is growing, and so it's going to be inevitable. It's no longer optional. The question is, do you just do the basic ESG type of work? Do you actually take it to the next level? And does it actually translate into value creation? And this is where I think the trend will become a reality. And it's complex because the evolution is not the same in every market, jurisdiction. Asia Pac is in itself very different from an ESG perspective.
I have a question actually before move on to for others to share their views on ESG. So how do you see that the ESG factors, how in Asia, how people take the ESG factor compared to the investment managers in Europe and US take the ESG factor? How do you compare that?
So again, I think it's always difficult to generalize, but it's probably fair to say in terms of maturity and understanding, first of all, ESG as a concept is, again, we're talking not about the new reality in the background, but as a concept is fairly new. The E part is the easiest understood part, also because it fits into the whole conversation around sustainability, Paris agreements, the UNPRI factors, and etc. And everyone can understand environmental issues. So I think the level of focus and understanding on the E element is stronger here in the region still. And we are slightly behind when it comes to the S, the social factor, and the governance. On some governance aspects, I think we are obviously very aware, in particular anti-money laundering, corruption, transparency. That's part of the G, right? So we are there in Asia. But whether we are at the same level of expectation and understanding when it comes to board governance, transparency in general, maybe not. So it's moving along. But Europe is probably more mature just because it's come from the regulators. And let's face it, there is a bit of that. It's a combination of state regulations or EU regulations, as a matter of fact, and then market reaction and appetite and willingness to move more or less fast. But it's true that having some regulations will help. Hong Kong Exchange, with disclosure requirements, reporting, etc., is going in the right direction. China is catching up. Actually, PwC released a WEF report last week on also the road of China on the ESG reporting and the fast evolution. So it has to come from also the regulators.
Okay.
So getting more mature,
more
basically.
Mature, obviously, more mature.
Sure. Now, turning to Anson.
One quick one, just to respond to just give you an example that I experienced. I think 2-3 years before we made acquisitions. we acquired a substantial stake in industrial companies in China.
Yeah.
I think one of the things in the list is that we have to satisfy ourselves with the environmental issues. Because what happens is for us, the risk is, okay, environmental is one thing. We understand that the local government can turn to the industry, can turn to the company saying that if you cannot meet the standard set out in the area, you can order to close down
Shut down the
Shut
factory.
down a factory,
the
yeah.
factories
Yeah.
straight away. So from my experience is, if I don't do the due diligence on the environmental issues, basically we decided not to move forward.
Yeah.
So that's my experience. I think the issue of becoming more important because there are a lot of local policies, especially in China.
Especially in China.
Environmental issues are critical.
Yeah.
They would like to protect. On one hand, they want to drive the economic growth in that particular city, but at the same in that region. But at the same time, they want to they want to have the economic growth, but at the same time, they cannot take the risk of having any negative issues on the environmentals.
Yeah.
Actually.
Yeah,
That's all.
I agree.
Thank you.
Thanks. I think it's really true. And also that's where the value part comes in, right? Because if you actually make the investment, it looks like the investment is fantastic, or you might have a good valuation. But in fact, if the factory is being shut down, that means your valuation is zero.
Of course, yeah.
So that's where the value pack comes in to saying you actually have a better proposition because you are more, the factories are regulated and comply to all those environmental ESG policies within the local government and the government policy. So from an investment perspective, just the licensing itself is actually a value of getting those licenses. So yes, true. It's really, thanks for giving a real, stories on that part when doing investment. Yeah.
Right. Thank you. Now, yes, it's good. ESG has been embedded in the investment process, and it's actually it's long term. It will drive the sustainable performance and also the shareholders' value, and then the in fact greater investment return. Now, Anson, I won't skip you definitely. Now on ESG, we would like to hear from you. What are the government initiatives on the ESG agenda?
Yeah. Well, I would like to pick up on one point that Rebecca has mentioned, is that it's becoming a compulsory part, and it's, the main pressure actually comes from investors in the investment market to drive ESG. Take HKMA, for example. The exchange fund right now, we do public market and private market investments, and we take ESG into account for both segments. Now, even back in the time when because I before moving to this division and developing the LPF, I actually worked at the Exchange Fund Investment Office a number of years ago, and I also spent time with the Investment Compliance Department. So back in my time, we have already been investing in renewable energies. For instance, in 2013, we made our first investment in renewable energy, and as of now, I would say that when we invest in building, very much like what Nichols has said, we look at the green accreditation as part of the process, and we also, right now, if we invest with a GP, we do diligence on the ESG aspects of the GP, or what are the previous investments, what's their investment strategy, etc. So making this part a compulsory part. And going forward, we're seeing that a lot of institutional investors has adopted the similar standards. Pension funds, sovereigns, these are the obvious suspects. They will adhere to very high ESG standards. What's interesting is that when we work with a lot of family offices in terms of our regular market outreach activities, and when we talk to GPs of PE funds, we are seeing that a lot of new family office owners, the next generation, they are more and more ESG sensitive. You know, they buy this idea, so they like impact investing. And so what we are going to see is that going forward, a lot of money and increasingly more amount of money will go into, you know, ESG compliant investments and ESG compliant sectors, and we'll see this will bring a lot of positive impact to the world.
And I think the market, because it's becoming more and more sophisticated and more mature, you're not going to be able to fool investors by just having a, you know, a sugar coating ESG type of tick the box vague report. They're going to actually look at the reality behind that more and more. Obviously, there's an understanding that it's a journey. You have to start from a fairly low starting point and reasonable expectation. And a lot of the investments might not be there yet, but what matters is actually having transparency, good data. So it's also essential to have data points, reference points, reporting, but that the reality translates into something. And it's always a challenge, because as everything, so to speak, new, or a new requirement or a new reporting you need to produce, there is an investment cost, okay, at the beginning, and no one wants to spend upfront and not exactly see the return. But the reality is the benefits will definitely outgrow the costs. And I think those that are banking on doing the minimum service delivery and thinking that it's going to be okay to just have a report here and there and that's going to be it, are going to lose ultimately in the mid to long term, because the benefit of all this is the reality of businesses transforming, people expecting real impact investing, not just strategy policies. And it's going to create more value to the brands, to the teams, to the management, because the younger generation, they actually look at the companies they work for, the values that are behind, a lot more perhaps than we used to, and it's going to also be part of the value of the
Thank you,
investment.
No, I really like the point that you make about the data.
Yeah, data is essential.
Yes, because this is really, LPs are actually looking for companies that have already invested in technological capabilities in the past, and how they will be able to come out using these capabilities, especially to respond to the complexities of COVID-19. So really, these are how to use more of the data to create more values to the companies, and that's a very good point. Now, okay, we have a few minutes left, and I do see that there's a question, Q&A question coming in, and the question is, what do we see the biggest challenges in the next 2 to 3 years that we faced in Asia? And anyone would like to take this question from the audience?
Market players.
I think for me, because what happened is I have to handle the clients every day, basically. I mean, in Asia, the issue is, okay, we know the needs of the investor. How we structure a public deal for this investor are very important to me. In the past, when you try to convince, I hate to say it, when I try to convince the client saying that, hey, we got the LPF regime here, structured in Hong Kong, you know, to try, I mean, yeah, we definitely will propose this kind of new structure to the clients. Whether they can accept it. I think the interesting thing is actually it's a great congratulations to HKMA on this. Over the last few months, every time I meet a lawyer, she or he would say, hey, we just finished another, we just set up another OPF for the clients. I think everyone's reporting the good news. But for me, yes, there are some first movers in the market to go into the market and pick up this. But for me, the whole situation is, we can see that over the last few years, the entire market have been changing. Since the introduction, especially since the introductions of CSR, the offshore center. Okay, in the past, everyone said, "Hey, when you structure something, use our offshore center." After the introductions of CSR, okay, the story started to change a little bit. Okay, now we have a new structure available. So what happened is, I think for me, as a practitioner, or someone who help the clients to structure or to meet the needs, basically is how to put all this substance, all this element, including the traditional offshore centers, this new structure in Asia, in Hong Kong, or even in Singapore, together to help them to provide them like a whole package of solution. That is our challenge that we are having. And the important thing is, as I mentioned earlier, there are a lot of cross-border transactions. I can see that that will be continue. That will continue to be the trend. A lot of cross-border transactions. One particular structure, for example, like the LPF in Hong Kong, is that good enough for investment package in different locations, in different areas? Is that suitable? Is that sufficient? That will be the questions that we have to ask. Basically, that would be that will be the challenge that I'm having.
Thank you. Now, I was speaking with Anson. Last week, I was speaking with one of the potential investors, and they're setting up 4 funds, and all 4 of them are Hong Kong LPF. Congratulations.
Yeah, thank you. Yes, we've been talking to a lot of fund managers in recent 2 months, and we've got a lot of encouraging news because some of the big names, those that you will see in the top 20, top 30 GPs in the world, are going to use LPF. As co-investment and vehicle or project vehicle. And definitely we are seeing this vehicle being picked up by a lot of fund managers in the mainland, followed by emerging managers locally, and then now we are gradually seeing big names, big labels using it. So we're taking the project to the next level, and we are very much looking forward to as to how this would evolve in another 6 months' time.
Okay, thank you. Now, I guess we only have a few minutes left. So, last question. Usually, that will be quite similar. It's, can I ask each of the panelists to give us takeaway points to take away? About this discussion and yes, the trends.
First takeaway points maybe would be obviously you have to give any new structure time to be understood. But everything is here, certainly in Hong Kong, for both the LPF and the OFC to be successful and to place Hong Kong definitely on the map of fund domicile jurisdiction credibly. And it's a mid to long term plan. It's starting quite successfully already, but everything is there. We have to continue to push the Hong Kong government authorities to hear the market and take on board any improvements that are obviously needed. It's an extremely competitive industry and a competitive world, so there's no exception in the PEVC space. But we have to be on top of these changes. The second one would be ESG. Okay. And just don't take it as again just as a temporary trend. There was some concern that because of COVID-19 and the economic downturn, and also obviously challenges to globalization and etc., maybe ESG would be put again on the back burner after having been such a hot topic for the last couple of months. But I don't think that's a fair assessment. I think it's going to be here.
Sure. Okay, Nichols?
I think this takeaway actually is the big congratulations to the HKMAs in the promotions of the LPF. Well, it's true. I think I can see that the the market practitioners are using it nowadays. But at the same time, the second thing is that I think the entire market is getting more complicated, or as usual, it's getting more and more complicated. I think upon the success of the launch of the LPF, I think maybe we have to remain flexible in this. I don't know. Maybe in the futures, LPF maybe will be a key element in the entire structure of a transaction deal, instead of having it as a structure for the entire projects. You know what I mean is, I mean, nowadays our focus is LPF is great, so we want to put everything under LPF. I'm thinking about another way is that the world is getting complicated, especially more and more cross-border transactions are happening. So what happens is maybe LPF will become a key element within our structure of our transactions instead of the leading structure. So I think the flexibilities remains. I think the key takeaway is we have to remain flexible in using this type of structure in the entire environment.
Okay, thank you. Very good point, Nichols.
Thank you. And for me, I would say that the one takeaway is that now Hong Kong has gone through a lot of difficult time last year and the year before. And to our surprise is that, well, and to our amaze is that Hong Kong has been extremely resilient, overcoming this challenge. As if, you know, as we have seen a lot of capital inflow last year. In terms of, you know, bank deposits, we've grown by nearly 10% last year. I mentioned about the investment market, the capital market, and the PEVC market, AUM. Not going to repeat it, but all in all, we've seen that Hong Kong has been extremely resilient and rebounding from, you know, the trough that we've seen arising from a lot of different issues. The most recent one being COVID. We've been doing very well. The whole market functioning very properly. We have an orderly banking sector. The IPO markets, we were number 2 in the world. If not the Ant Financials incident, then we would have been number 1 in the world last year again. So we have been talking a lot about fund structure, LPF, but again, Hong Kong being an IFC is not only about, you know, one government department, or is not about one fund structure, nor one particular tax treatment, but again, the ecosystem. And the ecosystem is still here. It's getting more robust and busy. We're seeing a lot more market activities than before. We welcome your business. So come to Hong Kong.
Okay, thank you, Anson. Now, Henry, what's your takeaway?
Okay, we talked about, you know, the LPF from other panelists. For us, you know, as a company, we actually started in Hong Kong, so definitely we will support, you know, Hong Kong with all these new regimes and policies. But at the same time, I would say that you know, the ESG factor is quite important, and don't take it as an obstacle. And I think if you actually look at the number of data that they are collecting and the investors are interesting to see, is actually beneficial from an investment perspective. And we are there to support, you know, whenever our clients need us to provide the service that we need to make sure that the GP or the LPs are up to speed with the international standard to be, you know, more mature. So that's what we, you know, I think we would do. From the fund formation, I think Asia definitely, I mean, a lot of research paper has clearly shown that the number of investment, the asset allocation in Asia will increase substantially for the upcoming 5 years, and it will be way over 5 trillion in 2025. So it's very promising. And when we look at the fund formation, Hong Kong definitely is one of the, you know, good options and opportunities. The good thing is, you know, the governments are HKMA are very open to receive new ideas. So we should look at other options like Singapore and Hong Kong, and don't take it as if I go to Singapore, it will just be in Singapore. If I go to Hong Kong, just in Singapore. There might be, because it's complicated. So you have to look at the type of deal that you're working on, the type of deal that you're doing, just like Cayman and BVI, right? So people don't pick size and say, oh, we'll do everything in Cayman. So I think a lot of options are available for us. We should speak to consult lawyers, consultants, tax advisors to find the best options out there. There are a lot more other opportunities for us to choose. Yeah.
Right, absolutely. Thank you, Henry. Now, I think it's about time. So thank you all for your valuable insights and sharing. And I've enjoyed very much. And so this is has come to the end. So thank you very much and goodbye.